Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Sunday, December 28th, 2025, and we're here to break down the market insights from yesterday, December 27th.
That's right, Ethan. Today's analysis was quite focused, actually. We saw a decent number of discussions, about 11 posts in total, but they really concentrated on just one stock. So while the broader market sentiment out there remains a mixed bag on some fronts, the company-specific trajectory for our one flag today seems to be leaning quite positive.
Absolutely. It gives us a great opportunity to really drill down, pun intended, because we're talking about an energy giant today.
Indeed. Today, our data spotlight is squarely on Canadian Natural Resources, or CNQ.
You know, Brooke, the online buzz around CNQ for 2026 is definitely leaning bullish. There's a strong sense from many users that the oil sector is undervalued right now, and some are even predicting a fresh commodity supercycle. People are really drawn to CNQ for its dividend strength, with comments highlighting a 5% plus yield and a track record of consistent increases for over 25 years. That's some serious long-term commitment.
I hear you, Ethan, and the dividend yield certainly is attractive at 5.2%. From a KPI perspective, that's a clear signal for income investors. However, we have to look at the other side of the coin. While some are optimistic about oil demand, a significant portion of the chatter expresses concerns about demand trending downwards into 2026. There are also discussions challenging CNQ's supposed cost efficiency compared to, say, Saudi Aramco. Fair points, Brooke, but let's not forget the company's own actions. The data shows recent news asking if it's too late to consider Canadian Natural Resources after its huge multi-year share price rally. That's not just talk. The historical stock performance for 2025 shows about an 11% appreciation. That completely contradicts some of the more bearish user comments claiming oil has been eating dirt all year. Plus, CN2's 2026 budget aims to expand assets and production, showing real confidence in their future, while still balancing shareholder payouts. And that's where the KPIs really start to align with the forward-looking strategy. That 11% appreciation in 2025 is crucial context for what users are discussing about future performance. When we look at the fundamentals, CNQ's debt-to-equity ratio is exceptionally low at 46.262. That signifies a very robust and healthy balance sheet, which is vital in a cyclical sector like energy. It gives them resilience and the capacity to fund those growth initiatives you mentioned without taking on excessive risk.
Exactly. It shows they have the financial muscle to execute their plans, and the PE ratio, sitting at 14.19, suggests it's not overly valued even after that rally. It indicates a reasonable entry point for a company with such strong financial health and growth plans.
Agreed. While the overall sentiment on crude oil prices and global demand is certainly mixed among users, CNQ's specific corporate actions combined with these solid financial indicators make a strong case. They've never been rated on our show before, so this is their debut.
So, considering the robust dividend, strong balance sheet, reasonable valuation, and the company's confident growth strategy for 2026, my take is clear. The positive company-specific trajectory really does outweigh the broader sector skepticism we're seeing.
I concur, Ethan. The KPIs confirm a fundamentally strong company capable of weathering market fluctuations. The dividend yield provides consistent returns, the low debt provides stability, and the PE ratio suggests fair value. This stock shows potential.
Our final verdict for Canadian Natural Resources, CNQ, is a buy.
All right, bringing it all together, here's our summary for today. Investigate as buy, Canadian Natural Resources Limited, CNQ. Investigate as cautious buy, none. Investigate as speculative gamble, none.
That wraps up our deep dive for today.
Before we sign off, remember this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice.
Listeners should conduct their own research or consult a licensed financial advisor before making any investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for tuning in to the Daily Hunt for Multibaggers.
We'll catch you next time.